Gold prices trading around that 1650, 1660 level. John, what's gold following right now?
Actually, it seems to me that it's reverted back to the holding hands with the euro phenomenon that we've seen. Certainly after the IMF asserted that, it's looking for $500 billion in additional lending resources, the euro climbed, and of course gold reached about a 5-week high near 1670. That was a resistance level which apparently made for a stall out, and we're back down to the 1660s or so. Some technicians out there still fathom that after the 1700 mark is reached, we could fall back to as low as perhaps the low 1400s. For the moment, I think the range remains the 1625 to 1675. And the next wave of action probably will come after we learn what funds have been doing lately.
And then I also want to touch on U.S. inflation. Prices up 3% for all of 2011. That's the highest level since 2007, but well below the 3.9% level we saw in September. So what does inflation mean for gold? Is it low enough for the Fed to really pump more money into the system with a QE3, or is it too low for inflation hedges to get put on with gold?
Well, I think it's rather the latter, because basically what it shows is that the Fed, as much as it took blame for everything it has done in the last 3 or 4 years, has managed to avert the worst outcomes, either a fall into total deflation and, of course, a rise beyond levels which would worry a lot of people and which have been forecast for so many years now. It's in check at the moment, and there's a bunch of other metrics that come from the U.S. economy, among them jobless claims, of course, which show that, there is steady improvement going on here. Certainly in an election year, that can't hurt, but I don't think this is massage data. This is concrete evidence that inflation remains in check, employment is improving, and that there was real substance behind the dollar's rise to this 80 to 82 area.
So then if we do, though, then get a QE3 from the Fed within the first 6 months of the year, because inflation is so low, do you think gold's going to take it in stride then?
Well, the fact that the Fed will do something this year other than talk, to me, remains a non-starter. I think the Fed is conflicted enough internally, and we've heard certainly from enough Fed officials to see that there is discord within the walls of the FOMC as to what to do and what not to do. I'm one who leans towards the idea that a QE 2.5 or 3.0 will not happen, and that in fact the Fed might raise rates prior to that mid-2013, holy grail target that so many people are alluding to right now, if in fact conditions continue to improve at the pace that they're improving at in the U.S.
Wow, that's a pretty bold prediction, especially if we're seeing inflation expectations come down. If it hits the same level it did back in 2010 in August when we got the hints of the QE2, would you change your tune?
I would certainly do so if, in fact, it fell to danger levels where the Fed starts seeing, a true stall out and the danger of, the whiff of deflation. At the moment, I don't think they're preoccupied with that, and they're certainly quite encouraged by their other mandate, which is to, try to keep employment at better than what we've had levels up to now.
All right, thanks, John. I really appreciate it. So inflation in check, and so are gold prices.